TSX slipping from yesterday's record high, but it has been a winner this year. And it's up more than 15% in the past year, despite the fears of a trade war. Let's get more from Barry Schwartz, Chief Investment Officer and Portfolio Manager at Baskin Wealth Management. Barry, great to see you as ever. Are you surprised to see the Canadian dollar hitting record highs?
I mean,
the Canadian market, I'm sorry.
Yeah. Well, we should all be surprised, right? If you would have told me, well, we knew that Trump was pushing on tariffs when he won the election, but if you would have told me that he would have slapped on insane tariffs, right, 145% on China, threatened Canada with significant reciprocal tariffs, call us the 51st state, our government in shambles until we have an election, right? And you would have said, well, don't worry, the market's going to go up, the Canadian stock market's going to be up for the year, and the Canadian dollar is going to go up. Everybody would have said, it would have laughed you out of the room. But that's exactly what happened. And it's the same thing that's happened with the pandemic, right? We had a global pandemic. You would have said that stocks would double over the next 5 years as a result of good corporate earnings. You would have been laughed out of the room again. So the stock market climbs the wall of worry. You got to ignore the daily noise and focus on what companies are doing and companies are saying and the tailwinds that the companies are benefiting from. The short-term stuff comes and goes, but I'm not at all surprised that stocks are at all-time highs in Canada, and very, very certain that we'll see all-time highs in the U.S. shortly as well.
Why is that? You think that despite the trade war, corporate profits will hang in?
Corporate profits are going to hang in and probably blow away a lot of people's minds because of the demand for AI. The Magnificent Seven, which represent a good chunk, we know, of the S&P 500, a little less now given their pullback, are just creating such dominant profits, still growing at double-digit rates, and I think a lot of people are underestimating this AI trend. We could talk about one of those stocks later.
But isn't AI going to take years to play out? I think that's usually the pattern with new technologies. It takes quite a while for companies really to work out how to use it to boost profits.
Andy, have you been looking at how many people have been using ChatGPT right now, as well as Google implementing the AI into their search starting today? It's going to be phenomenal. The companies are saying that their demand is off the charts, that they can't get any more chips from NVIDIA, that they're going to be spending hundreds of billions on capex for many years to come to beat the competition, and it's here. Unfortunately, people are getting laid off because AI is replacing jobs in coding, as well as a lot of back office and administration roles. So this is what's happening. It's real. It's not going anywhere. We're not going to be using less of it going forward. And I think there's some advantage here. People should be taking some advantage of the pullback in some of those AI names as a result. And in the meantime, they're all still extremely profitable and great businesses. So that's why I'm excited about the stock market going forward. I think interest rates are probably going to start to come down in the U.S. I think inflation is it's done. It's over. I don't think the tariffs are going to be a big impact. And that will add good vibes to the economy, animal spirits, and consumers will start feeling good again about spending money.
You have some ideas for us. Berkshire Hathaway, now I don't think this is an AI play, and certainly not directly, but Warren Buffett, of course, passing away. But you do see the company in good hands with Greg Abel, his successor?
Warren hasn't passed away. He's retiring at the end of the year. But yes, Greg Abel has been at Berkshire Hathaway for a long time, right? He's not just a brand new face. And he's been an operator of many of their divisions, including the energy division, and a key architect at turning around Geico, as well as Burlington Northern. So I think Buffett, even though he's one of the best stock pickers in the world and built the greatest business the world has ever seen, as he ages, he doesn't have the ability to operate the business as with the energy and strength that Greg Abel has. As well, Buffett has kind of been hands off, letting the managers of those businesses do what they do best. But, times change, things change, and you need some new vision. And I really am excited to see how Greg Abel allocates the capital. I really think that huge cash pile that Berkshire Hathaway has built is really going to allow Greg Abel to set the stage for what he wants to create for the Berkshire Hathaway 2.0. So I'm so excited about the things Greg Abel's going to do. And in the meantime, the stock has pulled back, a little significantly as a result of the announcement that Buffett is stepping down at the end of the year. And there's your opportunity. Great business.
My face is red here. Yeah, my report there of Warren Buffett's demise was greatly exaggerated, and I wish him well. I think he's 94. I think a lot of people wish him well. Do you think, Barry, though, that this flight from the U.S., this so-called flight from U.S. assets, is a real thing, given the unpredictability, let's put it that way, of the administration's policies?
No question. Chaos and uncertainty caused by the Trump administration has led to some capital flight, but they'll come back because they're going to see the profits. It's all about profits. There was a study done, all the $100 billion plus companies pretty much have been innovated and created in the U.S. Very few companies outside in Europe, for example. I don't know why anybody would put any money into European stocks. The good ones are more expensive than the American ones, and the other ones are all cyclical, commodity-related, mature businesses, industrials, and don't deserve the valuation of U.S. stocks. It's all about earnings growth. I think European earnings will be fine, but nowhere near what's going to happen with U.S. stocks. U.S. stocks have trounced the European markets over a long period of time. European markets are having their day in the sun, much deserved, of course. But I think it doesn't really matter what Trump does. Ultimately, it's going to matter what the corporate profits are from the U.S. companies.
But I'm a bit confused. So you do think there's a flight from the U.S., however, Europe is not an attractive alternative?
No, there is a flight right now. Well, there was, but I think obviously you've seen in the performance, the relative performance of European and Canadian stocks versus U.S. stocks. But if you look out a little bit longer than 5-6 months, you can see that the U.S. stock market is trounced, and maybe U.S. markets got ahead of themselves in terms of valuation. Mm-hmm. But what I think is that capital will just return back as they start to see the great profits from U.S. companies.
We are going to get more from Barry after this. He's going to give us a couple more stock ideas. Barry Schwartz is Chief Investment Officer and Portfolio Manager at Baskin Wealth Management.